we just spoke about the 30% who are funding everything.
Yeah.
You don't want to be those 30%. How do you avoid that as a young person who is just entering the system, and you have all these options? You want to buy an iPhone. You want to buy. Everybody wants to buy an iPhone, and it costs like $1 lakh. And you have all these options. What do I do?
Okay, so 30%, remember that number. It's really relevant to everything in finance. It's like the Fibonacci code of finance. Okay, number one, when you're taking out loans, okay, always do this mental maths. Is my EMI burden per month more than a third of my income? Okay, this is a ratio in finance. Bankers use it the other way. So you will not be approved a loan if the cost of that loan is more than a third of your income every month. This is called the debt to income ratio. So always keep your EMIs below a third. If you're earning $60,000 as your salary, never have EMIs going out in any month above 20,000. Got it? That's really important. And again, the bank won't necessarily tell you this. If you've been behaving well on your loans, it's always in their interest to just load you up a little bit more, a little bit more, a little bit more. The more they give you, the more chance you're going to make a mistake and get into that fee trap that we talked about. So first of all, take ownership of your own financial health. Work out what is the right amount for you. Another very important trick, when it comes to credit cards, okay, there's something called a credit limit. This is the maximum amount of money you can spend on a particular credit card at any time. So let's say you got 50K when you first took out a credit card, and you comfortably spent some of that, paid it back, and then they extend it to 1 lakh. Now your credit limit is 1 lakh. The trick of building a good credit score is keeping what's called your credit utilization below 30% again. So this is why 30% is such a magic number. That means at any one time, even if you have a 1 lakh limit, never have more than, let's say, 30K outstanding. Does that make sense? Keep your utilization low. The lower your utilization and you repeatedly paying back every month, the higher your credit score goes. Right? Because it's kind of sending a signal. If you think about it, what you're saying is,
safe.
I'm very sensible. Even though they gave me a lakh, I didn't spend it. I can control myself. That's a very powerful thing in building good credit behavior and creating a good credit score. So I have like a 10 lakh limit on one of my cards, but I never have more than 1 lakh outstanding on that card. And that has directly improved my credit score. I know that because I know how the system works. So you have to be a little bit clever. Again, it's a bit like a casino. You've got to understand the rules of the house. And this is where it gets a bit boring. Every month, you should have your outgoings below 30%, your EMI that you've already committed to below 30%. And then the dream scenario is that you then save another 30%.
Right.
Now, I know most people are doing that maths and going, oh my God,
30%,
impossible,
yeah.
impossible.
Yeah.
But what you should do is next time you get an increment, for example, adjust it in that direction.
Right.
An increment doesn't mean more EMIs or more spending.
Right.
It should always mean more savings because the goal is to get to that 30%, okay? The human brain is not designed to understand compounding. And compounding is both friend and foe. Compounding is how we get rich. Compounding is
what... The human brain is not...
It's not. I always think this is funny when people say, Elon Musk is a billionaire. And it kind of sounds a bit like a millionaire. Like maybe, they're kind of the same. But if you say, for example, what is 1 million minutes? Okay, if you went back in time 1 million minutes, you're going back in time to like 2023 or the end of 23, 24. So it's like 2 years ago. Okay?
My mind isn't complete.
But if you go back in time 1 billion minutes, you're going to like 100 BC, like the Roman times. You're wiping out all of human history.
Right.
And that's the difference between 1 million and 1 billion. Again, you cannot possibly imagine that concept, right? So the same thing works on the negative in credit when you get into trouble, but also on the positive. 500 rupees a month invested at a return of like 10%. can quickly become lakhs and lakhs and lakhs. It really can. So try and think about your money every month. When your salary hits, what do I have to pay? You probably have some outstanding EMIs. What do I want to save for myself? Let's put that $500 aside. I'm going to up it a little bit. You can do it. You can afford it.
I'll
500. Put that in a long term. Lock it away. Don't think about it. And then, in an ideal world, have a portion of that savings money in some kind of like FD, which is your rainy day fund. That's your emergency cash.
Right.
If there's any scenario, like you lose your job, hopefully that won't happen to you, or a big bill you didn't expect, a big medical cost, for example, for somebody in your family, you should always have on hand that amount of money. For some people, that might be like $50,000. For some people, it might be a couple of lakh, actually. Think about your life.
Right.
But make sure you have that as a backup plan.